the cool thing about the MACD, again, you can look for divergences the same way you would. The double cross is one. So like not the first cross, right? So this would be the first cross right here, not the first cross, but looking for the second cross right here as far as trend, if that makes sense. So this would be the first cross, right? We cross the zero line. The MACD crosses over to the top side, the blue. Not the first cross being the signal, but then looking for the pullback and then looking for the second cross right here to be your buy. So stuff like that. Yeah, and then always confirming it with a candle. And again, I think that's the biggest difference I had between old indicator Akil and new indicator Akil was old indicator Akil would look at indicator, like indicator, tell me what to do, right? The new indicator Akil looks at it as a supplement, right? It confirms. So it's like, okay, indicator, check. Price action, are you agreeing? So the indicator is my confirmation, where it's like, hey, or vice versa. I have my indicator give me a signal, but then I also need a signal with price. And that's how you start to unlock some of the power instead of just using the indicator by itself. Because again, no indicator by itself is gonna make you money. I am confident in saying that. I mean, nothing in general, no one thing. I think the veteran traders here would all agree. There's no one thing in the market that will give you a good or bad signal. Would you guys agree with that? Like, there's no one thing. Like even a candlestick formation. Like you can be a 3-bar reversal trader. Guess what? If you trade every 3-bar reversal, you're gonna lose money. But it's how you put a few things together that make the signal. And I think understanding that gives you a massive edge in the market when you understand that, hey, I'm not just looking for one thing, because everyone's looking for one thing. But when I have this plus this, then it equals that. And then there's the whole thing of like smart stop placement and target placement, all that stuff, fun stuff. But yeah, no, I really enjoy, and this is the nerdy part of me about trading. Like I enjoy looking at, I just enjoy looking at these things and reading the ebbs and flows. Again, the hook thing that Bud mentioned, that's something I looked into a little bit. It came secondary. I was looking, I think I was trading that longer term trend continuation strategy I had before. Where was it at? The SSL channel, if you guys remember this. I was looking for filters for this. Where basically, if you guys can see, I'll change the colors here. This was a strategy that showed promise, didn't really fit my personality. It's a true trend continuation strategy, and I'm not ballsy enough to trade it, to be honest with you. But this was one where I'll show you this real quick, which I would definitely recommend if you're someone that wants to be a trend trader. I definitely recommend looking into this. I went to do it on the daily. I never looked at it on lower time frames that much, but basically your base signal, just going back to a random point in time, and of course I'm going to pinpoint a trend here, right? I'll show you a few periods. Your base signal is white line crossing blue line, right? So as soon as you get this cross right here, this is your sell, right? This is your sell. And then your cross back above, this would be either, if there's no qualifier, this would be your buy, and you can go back and forth in between one and the other. Or if you do have a qualifier, let's say like you put in a moving average, right? Let's put in a 55 moving average. Or, and we're gonna get real nerdy here. I'm sorry, but I blame Bud. He's taking me. Bud, this is your fault. You got me started, Bud. Now I can't stop. I can't stop now, Bud. But we got nothing. We got nothing to look at here. But welcome inside my brain, right? So let's put a MACD back on as well. So this is something where maybe you have a qualifier, right? And these are things you look into where it's like, okay, I have my, and there's different tools you use. I use the ROC as well. But you have your signal here, right? And then, right, if you don't have a different exit signal, which another exit signal could be the stochastics. I played around with that for exit signals on this. This would be a buy. But if you have a qualifier, then it's not a buy, right? So these are the things you want to add, where it's like, hey, I only do buys if it's above. You only do buys if it's. I was trying to make a Dubai joke, but it didn't work. So I only do buys if it's above the EMA. So this one's not above the EMA, so therefore it's not a buy. Or I only do buys if the MACD is above the zero line, right? MACD is not above the zero line, so that wouldn't be a buy. So then you have your next sell signal right here. This one doesn't really do anything, right? Stops you out. Another buy, but it wouldn't be a buy because you have those qualifiers, and the qualifiers are meant to keep you out of stuff like this. Then you have your next sell signal right here, and then boom, right? You get another really good run, right? You get another really good run from here to here before another buy signal, but again, not really a buy signal because you have a qualifier. So you look at these qualifiers, guys, and this is what's important in strategy development, right? Obviously, this is just a hand-picked section. I'll show you the bad part of this, right? But look at this qualifier. And we think about, let me ask you guys this. What is the point of a qualifier in trading? Or a filter, we'll call it. The point of a filter is to like anything. You want to filter out the bad and you're going to filter out different stuff, but ideally you want to keep most of the good and filter out most of the bad, right? Would you guys agree? You have your filter in trading, right? This is your little funnel deal here. And all your trades go into this funnel. And ideally, right, you want most of the bad trades to get caught in this one while keeping most of the good trades. Now, there's going to be some good trades that get caught in here, right? That's always going to happen. There's going to be some bad trades that don't get caught, right? But ideally, you want to limit them. So you look at this situation right here where we had 1, 2, 3, 4, 5, 6 signals, right? We had 6 trading signals. And if we took every single one of these signals, we would have, let's look at our wins. That's a horrible W. I fixed it. Look at that. Let's look at our losses. I'm bad at drawing this, but stay with me. Let's see how many wins we had. We had 1. Call that break even. 2. We'll just call this a loss, actually. So we have 1, 2 wins in this area. In this very small sample size, we would have had 1. We would have had 2. We would have had 3 losses, right? All of a sudden, you have this filter in, right? We take away this one. This one's still a loss. We take away this one, right? We take away this one. We've just eliminated our wins. I think we have 4 losses in there. Wow, who knows what it is, right? Whatever. We take away majority of those losses, right? That's what a filter should do. Does that make sense, guys? Now, all of a sudden, you've gone to a situation where you had 2 wins, 3 losses, 1 break even, and now you have 2 wins. You didn't filter out any of your wins, 0 losses, and 1 break even. This is profit, right? Addition by subtraction. Eliminating losers, right? We spoke about this on the coffee break the other day, right? Eliminating your losers or minimizing your drawdown is the fastest way to increase your account size. That's why we add filters. That's why we add filters. Yeah, so it was a decent strategy. The problem that happens is when you get, let's see if we can find a consolidative period. Periods like, all right, we're not going to get one here, but periods where we're going sideways, that's where that's where it hurts, right? So if we have like a big sideways period, and dollar Canada happens to be trending pretty good, but let's say we have a period like this. This is where you get beat to death because there's no directional movement. So even if you have a filter, you're going to eliminate half of the losses, but you're still going to take a bunch of losses. So that's where the strategy was tough. It was also tough in the fact that you're going to see some really big winners, and you have to make the decision. Here's another period of consolidation right here where you get beat to death, right? That's what most trend traders don't see. They see all the great, like, oh man, like this move was awesome, Akil. They don't see all these consolidated periods where they're getting shellacked, right? The problem that is with this is like you get some really big runs, especially if you kind of if you modify the channel, I didn't do any modifications here, but if you modify the channel, you get some really big runs. You catch some really big winners. Like I'm talking, you can catch some things from like down here to up here. But you also give a lot back. So then the question is finding that sweet spot between I want to have a high win percentage. I want to get some money off of the trade, but I don't want to be so greedy that I give so much back. But if I'm not greedy enough, those big wins don't make up for the shellacking period. And that's where things get tough. And that's where the skill of being able to kind of build a strategy come into place. And most people don't know how to make those adjustments. And that's even psychologically, it's a hard pill because it is a sacrifice. You can't have the best of both worlds. We ran into, do you guys remember the conversation we had with Anthony Curry with the Daily Chore? He was trading the Daily Chore. And the problem was, he was hitting the Daily Chore, these massive winners, like these 500 pip winners, guys. But the problem was he wanted the best of both worlds. He wanted those 500 pip winners, but he also didn't want to give back anything on the ones that didn't go 500 pips and lost. And I'm like, you can't do both. Like you can't catch all of the trend and expect not to catch kind of the trends that don't follow through and the ones that pull back and take your profit away. You can't have both. You can't say, I'm going to let it ride, but I'm also going to make sure I take out profit before it retraces. Because guess what? Do we ever know that a retracement is happening before the retracement actually happens? No. Right? So you're putting yourself in an impossible scenario. Right? In hindsight, it's easy. In hindsight, we can look at a chart and be like, oh, it retraced right here. I'm going to take it out early. In real life, you never know. So it's a tough pill making that sacrifice, but that's the give and take of trading. In order to gain something, you have to give up something. If you enjoyed the video, do me a favor, hit that like button before heading out. And if you ever want to join us for one of our live sessions and talk trading or analyze the markets with us, feel free to do so. We host them every Tuesday, Wednesday, and Thursday, and they are part of your risk-free trial membership. So just head over to www.tier1trading.com, sign up for the risk-free trial membership. There's no auto bill or any sneaky stuff like that. Join some live sessions, download some software, take some training, and get on the path to becoming a consistently profitable trader. I'll see you guys tomorrow.